Eurozone unemployment figures for October have been released today and have reached a record high of 11.7%, signalling further deterioration in the Eurozone. Joining me on the line to discuss this further is Megan Greene, Director of Economic Research and Eurozone economist at Roubini Global Economics. Hello, Megan. EU unemployment figures for October have been released today and have increased to 11.7%. Megan, what are your thoughts on this?
I'm not at all surprised that unemployment is, hitting new highs in the Eurozone, and that 11.7% headline figure masks huge differences between the core and the periphery. So in both Spain and Greece, unemployment was over 25%. In Italy, it was 11.1%. But on the other hand, in core countries, such as Germany and Austria, it was much lower. In Germany, it was 5.4%. In Austria, it was the lowest in the Eurozone at 4.3%. So there's a huge difference between the weaker countries and the stronger countries, and I think that will continue to be the case as long as the Eurozone policy response to the crisis remains the same, such that it's all of the weaker countries that are having to make the adjustments while the core countries aren't adjusting at all. So the weaker countries are having to retrench and implement austerity measures and also implement structural reforms, which often have to do with the labor market and opening up the labor market, and that inevitably involves higher unemployment. So I think we can expect this to continue for quite some time. I think that, the Eurozone on average will continue to contract for the next 2 years, and I don't see unemployment hitting its absolute high and stabilizing until, early 2014 at the earliest.
How important do you think the overall EU unemployment figures will be to markets and investors?
Unemployment equity markets seem to be moving in the same direction now, which isn't usually the case. So it seems like the markets aren't really at all concerned about the latest unemployment figures. I do think, though, over time, particularly for Spain and Italy, that as they have this endless drip feed of really bad economic indicators, of which unemployment is only one, investors will take note and realize that the bond buying programs by the ECB and possibly by the EU bailout funds, which is what has kind of instilled euphoria in the markets of late, it doesn't do anything to really relieve the real economies in the Eurozone. And so I do think investors will recognize that if they see enough bad indicators coming out of Spain and Italy, and sentiment will shift to the downside.
And what strategies do you think EU countries should take to combat and boost unemployment?
Well, it's difficult because strategies to reduce unemployment require money and a stimulus, and there aren't really any governments in the Eurozone at this point that have a lot of room on their balance sheets to actually implement any kind of program for reducing unemployment. That's particularly the case in these debt-ridden peripheral countries, but it's also the case in the core countries. There are two things I would say that can be done. One is, as I mentioned before, the core countries aren't really making any adjustment, and the peripheral countries are making a huge adjustment, and it's very front-loaded. So I think making the adjustment less front-loaded, sort of loosening fiscal targets, and also loosening some of the targets for structural reforms could help in the short term, at least, with unemployment in the peripheral countries. Also, the core countries have a little bit of space on their balance sheets to provide a stimulus for the peripheral countries. So that could help alleviate and reduce unemployment. That being said, it's politically completely unpalatable for the core countries now. So I don't expect either one of those things to happen.
Do you think there is more of a focus on austerity in the Eurozone than on unemployment?
There has been more of a focus on austerity rather than structural reforms, and I highlight structural reforms because a lot of them, particularly for Spain, are targeted at opening up the labor market, and so they in the short term really increase unemployment, and so they're very closely linked. I think increasingly, there's been more of a focus on the structural reform elements of these adjustment programs than just on austerity. But these governments have been set in the periphery of the Eurozone have been set fiscal targets to hit, and the most expedient way of hitting those targets is just to cut wages and pensions and to try to boost tax revenues. So, it's a fiscal adjustment that's the fastest way to hit those targets. The structural reforms are politically very unpopular, and they take a while to actually be implemented, and then once they're implemented, they undermine growth for a couple of years often before they actually start supporting growth. So they're not as attractive for politicians looking to get reelected.
Thanks for joining me, Megan. Stay tuned to Dukascopy TV for exclusive interviews and updates. For now, though, goodbye.